What's up, guys? I'm about to show you exactly how I caught a trade for 1 to 4 risk to reward for 243 ticks today using the London close reversal entry model. So stay tuned and get your notepads out, get your charts out, and I'm going to show you exactly how I caught this trade. The first thing you want to look for when it comes to London close reversal is the New York AM high and the New York AM low. So if you find right here on the charts, we have our New York AM high that formed right at 1110. Boom, right there we have our New York AM high, right there. And now you look for New York AM low. If you come all the way down here, we formed our New York AM low at 9:35 a.m. Eastern. Boom, we have our New York AM low right there. Why is this important? Because you need to see the range between the New York AM high and the New York AM low. Okay, so now that we have both of those charted out, the next thing you want to do is pull out your Fibonacci retracement tool. You're going to go from the high to the low because we were bullish on the day, and you want to see price retrace back down to the discount of this range. What is the discount? Everything below this red line, everything below the consequent encroachment level of this range is going to be the discount. Everything above is going to be the premium. So if we are bullish on the day, you want to see us reverse up here after making our New York AM high down to a discount below the equilibrium, the consequent encroachment of this entire range. And then once it comes down to this range, you are now looking for the next step of the trade. Okay, so now that you've charted out your AM high, AM low, and your equilibrium price, you need to zoom in and find your actual entry level. I like to find my entry level on the 1 minute time frame. I look for a bearish breaker or a bearish unicorn. If you don't know what that is, go check out the video I'm going to link right now telling you exactly what a breaker block is or a unicorn model. So if you know what that is already, it's a high, a low, a higher high, and a displacement of the lows. So we want to see a market structure shift down below this low right here. We got a market structure shift right here, and that is represented by MSS, market structure shift. And then we had a high, a low, a higher high, a displacement of the lows, creating a bearish breaker block. And our lowest down close candle on the first high to low is going to be the breaker. Okay, so if we chart that out, that is our breaker block right there. All I wait for is displacement below, get the market structure shift, and then I wait for retracement back into the breaker block. I put my stop loss above this high right here or above the breaker block, wherever it needs to be. Today I had about a 55 tick stop loss, so my entry was a little bit lower. I waited for a reaction, and then I had about a 55 tick stop above the breaker. And then I got in my short position, and I held it all the way down to these lows, 243 ticks to be exact. From all the way up here to the exact equilibrium price down into a discount, I ended up selling everything. Now I could have kept holding if I wanted to, but I wanted to take my profit. This one did eventually run for about 600 ticks. But again, I caught my 243 ticks. I was very happy with that profit. But that is where you want to target your entry. You want to wait for the reversal pattern, like a 1 minute bearish breaker, wait for the market structure shift, get retracement back into the breaker, and then target your entry down to the equilibrium, just like I did today. And I'm about to show you my actual executions so you can see exactly where I got my entries. Okay, so as you can see here, I did try to take the longs earlier and I had a decent entry, but I got stopped out before the trade played out, but we did see the longs eventually go. And then if you look here, you can see my entries right here. So if you highlight that right there, you can see I had my entry around 20,181. So 20,181 was my actual entry. And you can see I waited for that bounce off the fair value gap or off the breaker block, got my entry, and then we absolutely dumped. And then I sold one contract at 20,161 just to secure some profit, right? I secured some profit. I sold two contracts here at 161 for about 80 ticks. And then I just kept on holding. I sold my next TP at about 15625, right about here, right? So another one for around 100 ticks. And then I held all the way down for the equilibrium at 20,12225 for my full TP. You can see my executions right there. That is the trade that I called out that ended up hitting 243 ticks and is one of my favorite entry models that I ever have traded before. One last small tip that you want to look out for is SMT divergence. That's just going to give you a little bit of extra confirmation that the reversal is stepping in. If you look here, you can see that ES at the same exact time moved up and did not sweep the low and then started showing a lot of weakness. While at the same time, NQ came up and swept the high and then started reversing. So if you can combine this SMT divergence with the reversal pattern in the entire London close reversal, you can start to catch some very nice setups in the market around lunchtime. If you enjoyed this video, please like, comment, and subscribe to see more content like this in the future.